This video is created by Jagrat Creations. It is on final accounts. Just observe the sum that I intend to solve here before you. This is the trial balance, these are the adjustments. From the following trial balance of Mayuri as on 31/3/2017, prepare final accounts. Here you are given debit balances and credit balances. Drawings and capital. Drawings as a debit balance, capital as a credit balance. Purchase and sales. Debit balance is purchase, credit balance is sales. Goods return. Debit balance is sales return, credit balance is purchase return. Provident and Provident Fund contribution. Provident Fund contribution is an expense. It has got debit balance. Provident Fund is a liability. It has got a credit balance. Provident Fund investment and interest. So Provident Fund investment has a debit balance, and the interest received on investment is an income that is added to Provident Fund balance on the liability side of the balance sheet. It is an income of a specific fund. Debtors and creditors. Debtors has got debit balance, creditors has got credit balance. Discount debit balance is discount allowed, credit balance is discount received. Bad debt and bad debt provision. Bad debt is the loss that has got a debit balance. Bad debt provision, it's a provision, profit appropriated to meet with the loss. To meet with the loss, profit is appropriated, so it has got a credit balance. Bills, debit balance, bills receivable, credit balance, bills payable. Opening stock, demurrage, they are known as storage charges. Purchase expenses, toll means weighing expenses, custom duty. Trading expenses, goods withdrawn as drawing, goods distributed as sample. Advertisement expenses, commission means order. Cash balance, bank balance. Adjustment. Closing stock of rupees 1,50,000, out of which the market value of 25% stock is 20% more. So 1,50,000 is the total stock. 25% thereof, 37,500. The stock of 37,500 is 20% more. So 37,500 into 20%, so it is more by 7,500. But increase in stock is not to be considered, because stock is to be valued for final accounts purposes, cost or realizable value, whichever is less. So here the cost is going to be less because the market value has gone up. So cost will be considered while preparing the final accounts. Rupees 90,000 credit sales is yet to be recorded. Unrecorded sales, add to sales, add to debtors. Now write off 18,000 as bad debts from debtors and provide 5% bad debt reserve. Interest on capital is to be calculated at 10%. Charge 5% on interest on drawings. Commission 900 yet to be received. 50% of the advertisement expenses are yet to be carried forward, means prepaid. Now on the basis of this trial balance and the adjustments, I want to prepare final accounts, means I want to prepare trading account, profit and loss account and balance sheet. First of all, these are the adjustment items relevant in trial balance to adjustments will be marked. I would also write down, see, drawings and capital, interest on drawing and interest on capital relevant adjustment. Debtors, bad debt and bad debt reserve adjustment. Bad debt and bad debt provision relevant to the bad debt and bad debt provision adjustment. Advertisement expense prepaid, carried forward, and commission yet to be received. So these are red color items are the items of trial balance which has got a relevance in adjustment, and they will be recorded in final accounts subject to adjustments. Now let me start preparing trading profit and loss account. This is my trading account. Here is the profit and loss account. Here I am going to prepare balance sheet, capital, investment, current assets, loans, advances, etc. These are the various titles under which the expenses will be collected in case of profit and loss account. I am going to start with adjustments. First adjustment, closing stock is 1,50,000, out of which market value of 25% of the stock is 20% more. Increase in stock, increase in the market value of stock is to be ignored. So closing stock will be valued at 1,50,000 because stock is valued at market value or book value, whichever is less. Here the book value is less. 1,50,000 will appear balance sheet asset side and trading account credit side. Next adjustment, 90,000 credit sale is yet to be recorded. Sales 3,18,000. I write debtors 1,38,000. If you record sales, debtors account, customers account debit to sales account credit, so add to customers, add to sales is the adjustment effect. So I have added 90,000 in the sales and 90,000 in the debtors. This is how debit and credit adjustment effect is given. This is a debit effect, this is a credit effect. In case of closing stock appears on the asset side is identified as debit effect. Trading account credit is a credit effect. Now, write off 18,000 as bad debts. So there is already a loss of 1,500. Additional loss occurred. 18,000 deducted from debtors because the amount could not be recovered from the debtors. And this bad debt loss debited to profit and loss account. So 1,000 loss occurred during the year. 18,000 loss on account of bad debts found at the end of the year. Now, this is bad debt loss is deducted from debtors. Now I am required to provide for bad debt is about 5%. So to let 10,000 into 5%, 10,500 is the provision for loss is required. So 10,500 is the provision for loss required. That also I write on the debit side. Minus provision already existing 900 is to be deducted. So the net amount debited is 29,100. Now let me explain. Bad debt loss occurred during the year 1500. Bad debt loss found at the end of the year 18,000. Both our losses are required to be debited. Now, for this type of loss on the existing debtors, provision is required. And that provision is identified to be 10,500. This 10,500 is a provision required. Against that, provision actually existed in the books of accounts as per trial balance is 900. So 10,500 is a provision required. 900 is a provision existed. So 10,000 minus 900 is the provision that has increased. So total amount to be debited is bad debts during the year, bad debts found at the end of the year, plus increase in provision or decrease in provision that needed is to be considered. So here the provision has increased from 10,500 to 10,500 minus 900. So it works out to be 9,500. So 1,500, 10,500 minus 900. So it should be 9,600. So 1,500, 18,000 and 9,600, 29,100 is debited to profit and loss account. This is one way to explain. The another way to explain, the provision for bad debt reserve existed 900, which is quite short as compared to the losses sustained during the year and at the end of the year. So 1,500 is a loss of bad debts occurred during the year. That loss is more than provision existed. So 900 is the provision existed against that loss occurred 1,500. So there is a surplus of loss against provision 600 over and above. Bad debt loss found at the end of the accounting period is 18,000. That is also required to be debited being lost, and the additional provision required on the debtors at the end of the year 10,500. So 1,500 minus 900, 600. 600 plus 1,800 plus 10,500, that is to be debited to profit and loss account. Next. Interest on capital, 2,10,000. 10% is 21,000. Financial expense debited to profit and loss account and credited to capital account. Drawings are deducted from capital. Interest they are on at the rate of 5%, 750. So 750 is the interest on drawings that is added to drawings and deducted from capital. And this being income credited to profit and loss account. Next adjustment. Commission 900 yet to be received. Commission already received 3,300. Yet to be received. Receivable 900. The amount receivable will appear on the balance sheet asset side. Commission due but not received. Now 50% of the advertisement expense is to be carried forward. So 9,000 is the expense. Out of that 50% is carried forward, means prepaid. Prepaid expense will appear on the balance sheet asset side. This is how adjustments are considered. Now let me copy the remaining details from trial balance. Purchases are debited to the trading account. Sales is already recorded. Goods return 9,000. Debit balance is a sales return deducted from sales return. Credit balance deducted from purchase return. It is purchase return deducted from purchases. Provident fund contribution 1,500 expense debited to profit and loss account. Provident fund credit balance liability, balance sheet liability side. Provident fund investment debit balance asset side. And the interest on provident fund investment is an income of the fund, so it is added to the fund on liability side of the balance sheet. So provident fund will be 9,600. This interest is the income of the fund held on behalf of the employees. So this interest is required to be added to the provident fund. So fund that we maintain for the employees, it is the income of the employee, so it should be added to provident fund. Creditors balance sheet liability side. Discount allowed debited to profit and loss account. Discount received credited to profit and loss account. Bills receivable 45,000 balance sheet asset side. Bills payable balance sheet liability side. Opening stock trading account debit side. Damage expense related to delivery of the goods that has been received. So it is debited to trading account. Purchase expenses. Tolai means weighing expenses. They are debited to trading account. Custom duty expense relevant to purchase is debited to trading account. Trading expenses are identified just like office expenses, debited to profit and loss account. Goods withdrawn, goods go out, credit balance, trading account credit. Goods distributed as sample, trading account credit. Cash balance, balance sheet asset side. Bank balance, balance sheet asset side. This is how all details of trial balance and adjustments are considered. Close trading account. Find the gross profit or gross loss, whatever it may be. So total of credits at 5,70,000 minus debit. So this is a gross profit 4,200,000 that is transferred to the credit side of profit and loss account. From this you are required to deduct administrative expenses, sales promotion expenses, financial expenses and other expenses. You will get the net profit. So 4,06,350 minus all these expenses, you will get the net profit that is to be added to capital. So profit added to capital. From that, drawings and interest on drawings are to be deducted. You will get the net capital balance. Have a total of liability side and asset side. Asset side total is 5,95,800. Liability side total is also 5,95,800. This is how balance sheet totals agree. Now this is a sum for class 11 or say 11 standard. Sum on final accounts with adjustment is being solved here before you. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to all of you.